Welcome, everyone. This is Michael Gibbs, and I am the founder and CEO of Go Cloud Careers. And today I am here with a very exciting guest. I am here with Yatin Karnik. Yatin is the founder and CEO of Confer Inc., and he has an application called Confer Today that's going to save regular people thousands of dollars on the purchase of a new home. I've been involved in the real estate business for a very long time, and it's something I'm super knowledgeable about. I am here with Yatin, who spent decades working for the largest home mortgage company and supplier in the entire United States, and he's got ways to help us. What's even more exciting is he's got a cloud-based app that uses machine learning to help Americans find their best home mortgage at the best price. And as home pricing is going up and becoming less and less affordable by the day, and as interest rates are going up in order to take some of the inflationary pressures out of the economy, it's going to be harder and harder for the average American to purchase their own home. And Yatin's got a solution for that, a way to get people better interest rates and cut costs out of the mortgage equation. And because of that, I'm so excited to have him here today. And of course, it's cloud-based, which really excites me. There's some machine learning in there, which really excites me. And when tech can make people's lives better, it really excites me. So I'd like to introduce Yatin. Yatin, could you introduce yourself and tell us a little bit about yourself?
Absolutely. First of all, glad to be here, Mike. It's my pleasure to be here on this platform and share about our company and our app with your viewers. So, as you introduce myself, thank you. My name is Yatin Karnik. I've been in the mortgage industry for 2 decades. And as Mike shared, I have spent 18 plus years at Wells Fargo Home Mortgage, leading various teams and departments over the years. I ended with being Senior Vice President at Wells Fargo Home Mortgage, leading their national operational support and fee governance and fee strategy before I started Confer, where we are making borrowing affordable for everyone. And currently, we have an app in our app stores, both the Apple and Android, which is free to download. And by using that app and comparing your mortgages, like Mike said, you can save thousands of dollars on your mortgage. And we'll get into the details uh, along the way.
I love that. So I want to get into the tech in just a minute, but I want to make this pretty clear to people since I know a little bit about purchasing mortgages and the such. To me, it's been a process where I call my mortgage broker and I say, "Hey, Mark, I'm interested in a mortgage." And he looks up and he says, "Mike, your credit score is this, which means you can buy anything. Your debt to income ratio is fine. Here's three options." And, there's three options. And, when I look on Bankrate, those interest rates are a whole lot lower than those three options. I finally select one of those three options, which may or may not be based upon which commission is the best for my broker. And then when I get this thing, I know there's a list of fees that I don't even know what these fees are. Coffee fees. I photocopied something fees. I went to a baseball game fees. I mean, I'm exaggerating, but not really. I mean, there's a list of fees. I bought a house and, the settlement costs on my home were like $25,000. Now, that was ridiculous. Now, a lot of it had to do with Florida taxes, et cetera, et cetera. But, there's fees that I don't even understand. So could you talk a little bit about what those fees are for 2 to 3 minutes? And then we could talk about why you created this great technology solution to help solve it.
Absolutely. I would love to. So, if I may answer your last question first, why we created this technology. So, you started with an example where typically you would go to your mortgage broker, you have the best FICO score, and so he's going to look at a couple of options, look at his loan economics, his profitability, and based on that, he might tell you, Mike, here are the three options. But, Mike, what happens is the three options, whatever lender they might be from, those offers come attached with third party service providers that have been picked by that lender. So if you went with lender A, they might have used third party service provider X, and you weren't given the choice to look at what other service providers are available in that geography that could service your property, and maybe they're better based on customer feedback, based on customer reports and their service levels, and not to mention their prices. And now, coming back to your first question, how does this help? So, what happens, what we have seen is there are a lot of fees, and you were partly joking, but partly you were spot on. There are fees that don't belong there. In today's world, in year 2022, where we are looking to digitize almost everything that we can think of, and most of these records being already digital, at least the loan files are digital, and yet you'll see fees like copier fees that make no sense. So that tells you those are what we commonly refer to as junk fees. And our app finds those fees that are not uh, allowed in that particular jurisdiction for your transaction, or in some cases, the fees are exorbitant or non bona fide. And with the help of our artificial intelligence, it finds all of those and saves you money. And the last thing I'll share is if you don't trust us, first of all, our app is free. You have nothing to lose. You can download for free, compare, and see for yourself that you can save thousands of dollars. But if you still don't trust us, I would say look at Freddie Mac. Freddie Mac's research clearly states that by comparing just two official loan estimates, you could save upwards of $1,500. And if you compared five, you save $3,000 and more on your mortgage.
Well, I want to put that into common terms for normal people. $3,000 is a lot, but it doesn't sound like as much as it really is. But let's put it into practical terms. If somebody has the average mortgage right now for an average home price, which is $400,000, and they've got, say, a $2,500 monthly payment, on that, $500 goes to principal and the rest is interest if they're lucky. So $3,000 equivalent, if they paid that directly to principal, it would save them 6 months of $2,500 a month in order of payments. And realistically speaking, 2,500 times six is $15,000. So by using the time value of money, that $3,000 really is $15,000 to that person if they applied it to the mortgage, applied it to the principal of that home, which to me is sky high and a lot.
You're spot on. You hit the nail on the head right there, Mike, because what happens is oftentimes when borrowers are looking at mortgages, they're only solely focused on interest rates. And now, don't get me wrong, interest rate is important, one of the most important, but not the only thing.
Not at
And
all.
the reason is you might look at these fees upfront and say, oh, it's just $500 more, it's just $600 more. But what borrowers oftentimes don't realize what you just said, $1,000 upfront is $4,000 over the life of the loan.
Right.
When you paid with interest rate and when you amortize it over 30 years or whatever your term is. And so when we look at the impact this has to borrowers' affordability, that's huge. And like you rightly said, Mike, with average loan amount across the nation being 400,000, and if we are able to save $3,000 in fees, imagine it could be the difference between getting approved or getting denied for many people.
Yes.
That's how important this is.
And I'm there and I see it. For me, I've always played with the time value of money. I remember my first house that I bought, it wasn't even a shoebox. It was the smallest condo you could say, but I was able to buy it with a 10-year mortgage. And I could see each month the principal going down. Then I paid double principals. A couple of years later, I was out of it. Now I lived in a tiny shoebox. I loved the shoebox. I was happy there because it gave me freedom. My friends were buying bigger houses and bigger mortgages, and I was always afraid of the payments. But we all have our things. But, I love what you're doing because those fees are exorbitant. And when we start adding the time value of money and we do net present value calculations and future value calculations, every dollar means so much. So let's talk about the tech. I've got a channel full of cloud architects, cloud engineers, and I don't want you to give anything away proprietary, but when I hear this, in my mind, I know how you're architecting, but could you talk us through the main components? Is it cloud-based? If it's cloud-based, what are the main ways that you're ingesting data within reason? Don't give away the kitchen sink. And, what kind of databases are you using? What kind of machine learning algorithms? Something that my audience will be like, wow, the cool tech. Something like a steak they can get their teeth into.
I would love to talk about it. So we are, like you said, we are cloud-based. So we are on AWS cloud, and we have AI in the background where we have created a synthetic data lake that is ever growing, where we capture all the information that we get across the nation with regards to what are the different fees different lenders are charging in different, and I don't mean to get too technical in terms of the domain, but on official loan estimates, remember this, there are three categories. Well, there are more, But primarily, there are three categories of fees that the lender has zero tolerance. So if they say it's $100 and it happens to be 110, doesn't matter. The $10 will have to be eaten by the lender. So it's preferential that you have a lot of fees in this bucket. Then the second category is one that is only 10%, and the third that has unlimited. So our synthetic data lake that uses a Mongo database in the background, and we have created a data lake that looks at any fee that we find on the loan estimate of the borrower, and we understand from regulatory standpoint, from CFPB standpoint, where was it defined to be in what category, regardless of what you call it. So if tomorrow, Mike, you started your own mortgage company and you start charging copier fees, our AI will catch it. It will not only catch it, but it will also understand what is the relevance of this fees on this transaction. Because it could be a co-op transaction, it could be different, it could be a townhome versus a single family. So all of that intelligence is built in to our system. And that is what it runs through. So it will scan your loan estimate. It will go through our model to look at what fees in what sections are relevant and will find out anomalies. And this is where our patent pending tool really kicks in, where we have implemented what's called a CFAS framework, compare as a service. So if I may, give me a
Yeah.
moment to explain, right? So when we talk about comparison, mathematical comparison is the simplest. We have learned that since our childhood that 1 is greater than 0 and 4 is greater than 3 and so on and so forth. Yet, when we talk about comparing financial instruments like comparing financial documents or comparing mortgage offers, the key is understanding the context and understanding the terminology of that particular domain. For example, for a first time home borrower, when we talk about paying points, are origination points and discount points the same? When we talk about certain fees, do they understand what that means in the context of the transaction? And more importantly, what is the time value of that money?
Yeah.
If I told you I'll give you $100 today and you do X versus Mike, if you do Y, I'll give you $200 tomorrow. How do you compare something like that? That's where our patent pending technology and tool comes in and helps the borrower in identifying what's financially beneficial and optimal for their specific scenario, not just generically what's good. What's good for Mike is what our tool does.
See, Yannick, I love that. So I know if I go to buy a car, and I buy cars every 15 years because I don't like payments. I go in there with my HP 10C financial calculator and I'm calculating the net present value and the future value. And I'm driving them nuts. I'm like, no, that's not acceptable. This is acceptable. And they're like, who are you? I'm like, I studied finance and economics, like all business executives, like our architects. I do an RO model for everything. But most people don't do that. And explain to people exactly how much interest really goes because they say 5%. But it's not 5%. It's 5% per annum, which is all interest loaded up front. So, people will have a house, they'll pay 10 years of mortgage payments, and effectively it's all interest in the beginning. So I want people to realize how big is this interest rate? How much are they really paying away that's just lost money forever?
So, even today, with rising inflation and with what we see around us in terms of house prices and how the markets are doing, I still believe that the path to financial freedom is through the dream of home ownership. It is still true. However, the affordability is being hurt because of higher interest rates. And more so today than ever in the past, it is important that borrowers pay attention to these fees upfront. Because as we have been saying over and over again, $1,000 upfront could equate to $4,000 over life of your loan. And if you're looking at $20,000, 25,000, depending on your loan amount, on where you're buying the property, we are looking at significant impact to how much interest you'll end up paying over the life of the loan. Now imagine if you were to save that upfront, you could have bought a bigger house. Or for that particular house, you could have a couple $100 lower monthly payment. How good would that be? And again, this app is free. You have nothing to lose. And even if you're confident that you got the best mortgage offer that's available out there, be confident. Just download the app, compare your mortgage offer, and be confident that you did get the best offer. You have nothing to lose.
Yatin, it's not just nothing to lose. All businesses do their due diligence before they make an investment. They look at the alternatives. They look at the cost of it. They look at the return on investment capital model. They look at the opportunity cost. If I don't invest my money here, I can invest it here. I do that for every aspect of my life. I encourage my cloud architect students to do an RO model in everything. I mean, their customers are going to demand it. I demand it. So I think it's really there. And by doing this, they can start looking at the time value. How much different is it, that 15-year mortgage versus the 30? Does it really matter? Is it only 10% difference in payments, and is it going to save me 15 years? What manipulations can I do? Should I pay a discount point? Should I not pay a discount point? But at least it gives people the power. You're basically enabling a free market approach, because the banks, to me, have a closed ecosystem. You go to the bank, you get a mortgage. They take whoever works for them to do the inspection, to do the title search, to do the such. Are you enabling us also to find our own people?
Well, so we are all about informed choice. We equip the borrower with information and knowledge so that they can make the right financial decisions for themselves. That's what we are all about. And I think informed choice is about giving informations the knowledge that they did not have before. For example, is there a marketplace today that borrowers can go to and say, hey, I'm looking to buy this property and I'm looking to find a title or escrow agent that will close on this property? Today, what happens, Mike? You go to your realtor, or you might ask your mortgage broker, hey, who should I use? But is there a place where you can go to independently and verify who are the service providers in that area? Can you stack rank them by customer feedback or their reviews or even by their cost and service levels? None of that exists today, but it's changing with Confer on the scene. Now you can. With our app, you'll be able to see all of that. You'll be educated and you'll learn this fees that is being charged by this lender. Is it 80th percentile in this particular region, or are you way off and they are charging you 200% as compared to what most of the people have paid in that particular geography? All of that information equips the borrower to make the right financial decision and brings them closer, helps with affordability, and brings them closer to the American dream of home ownership.
I think that's terrific, because I know what it's like. You don't know who to call. You call your realtor. Oh, there's the good home inspection person. You pay them for the home inspection. You're in the house for 30 days, and you found out that you have 15 problems that your home inspection never found. The things they told you weren't really problems in the first place, but the plumbing, the electrical, and the foundation that they didn't notice, they're problems. So no, I want something better than that too, because I know how hard it is. You pick a title company and who they work for, the bank. They're not in your best interest. They work for the bank. I want someone that's looking after me.
That's exactly right. That is exactly right. That is what we started out with, right? When you were talking about when you call your mortgage broker. Mortgage brokers are great to look at different rates. So they look broadly. Don't get me wrong. They are the right place to start, but that's not the place to end. You are still missing on a lot of information. You might have picked a certain lender to go with, yet you have the right to pick all the third party service providers that will be serving that particular transaction. And you need to have access to information so that you can make the right decisions for yourself.
I love this. Now, I didn't talk heavily about the tech, and here's the reason why. I always look at the solution, and the tech to me is secondary to the solution. You found a real business problem. Americans pay way too much when they try to get a mortgage. And there's so much obfuscation that you look at something and you can't even figure out what it is. And then, the companies hire armies of lawyers to make it look even more complicated. So finding a way to do it's there. So is the data I'm going to ask a little bit about the tech. The data coming in, is it streaming data, or is it you're more pulling it from? Is it more static data?
So I know, Mike, you're talking about more technical
Yeah.
question, and I will answer that. But if I may take a minute or so to give you a little uh, history of how we got here, then my answer to your techie question will probably make a little more sense.
Sounds even better.
All right. So back in 2008, we all remember the financial crisis and what happened. So coming out of the financial crisis, uh, the government looked at what needs to be done, and they came up with new laws, which was signed into law in 2011 by then President Barack Obama into law called Dodd-Frank Bill. I'm sure you've heard of this, and our
Yeah.
audience have heard of it extensively, right? Title X of that law created a need for a singular regulatory body in this country. Now we know that body to be CFPB, Consumer Financial Protection Bureau. They spent billions of taxpayer dollars looking through residential laws across the country, and they said, we're going to revamp it all. We're going to get rid of the four official documents that had resided until then, like good faith estimate, HUD documents, and so on and so forth. And they came up with two instead of four. And their logic was, after spending billions of dollars, that this particular format of the document does two things. One, it enables the borrower to know exactly what they are going to be paying for. And that's where the term know before you owe comes from.
Mhm.
And the second, by making it so simple and standard, it should enable the borrowers to shop lenders around. Those were the two objectives of spending billions of dollars on creating what's called official loan estimate. And by the way, official loan estimate became the law of this land on October 5th in 2015. Now, since then, we created the document, we know the intent of the document, but is there a tool that enables you to compare and shop lenders around? Not until this time, not until Confer came around. So now answering your technical question as to how do we get all of that information? So what we have done is we have gone through pages and pages of RESPA and TILA, and I don't mean to just throw acronyms around, but those are the regulatory framework that defines what fee should be charged, where it should be charged, in what condition it should be charged. And we have built all of that into our data stores. And on any given transaction, when that official loan estimate comes in, we scan through every single fees, which is segregated by what section. And section defines whether there is zero tolerance, unlimited tolerance, so on and so forth. And with the algorithm that we have built, when it matches up, it will try to find anomalies. Anomalies where, oh, copier fee. How did I see a copier fee in section C? This is just a single family in Florida. And that's how it will bring out anomalies. And then based on the level of anomaly, so it could be a fee that's relevant and bona fide, but the actual fee being charged for that service might be exorbitant. So that's one flavor. Or the extreme other end of that flavor could be that the fee just doesn't belong there. It's not even required. One very simple, again, this but obvious, but I'll give you a simple one just so that people can relate to it. You'll often see a re-inspection fee, which is not required on a property that's already built. It's typically required only if it's a new construction. They want to see what last minute changes have been made. But oftentimes I've seen people put it on there, and if customer asks, they'll be like, "Oh yeah, we just put it on there and we take it off." But what about all those people who never called? Did that fee got taken off? I know. Oftentimes it doesn't. Many time it does, many time it doesn't. But there is nobody watching out for the borrower until now. Now we will catch it.
I love it. So you're getting the information from those federal documents.
That is correct. That is
And is
what
that
we have.
coming in via like a Kinesis or something like that or a Kafka?
Yes, so we did not use Kafka, but we do have other proprietary uh, uh, authentication mechanism that authorizes where the information is coming from. And then based on that, it goes through the pre-built logic based on the regs and looks for anomalies. And based on the category, then it takes action further.
Okay. Very interesting. On my first mortgage for my first house, I noticed some real anomalies. Now, I'm a verbal person. I like giving speeches. That's me. I've been designing things. I practice medicine, but I'm not Mr. Math. I hate math, but I love what it can do. I remember I go to my first house and look at my first mortgage, and I look at it and I say, these numbers don't make sense. And because I took my HP10C financial calculator, calculated the mortgage, calculated theirs, and I said to the real estate attorney, I said, there's something wrong with the math. And she says, what are you talking about? It's off by $300 per month. And she says, it can't be. And I said, it is. I said, we got to go. She's like, you're really good at math. I said, no, I'm not good at math. I did 10 steps on a financial calculator, thought this was wrong. The bank did fix it. But what if I signed it? Even the math was wrong.
Well, without airing dirty laundry too much, I can tell you firsthand that there are a lot of inaccuracies that are typically caught at the back end. Many responsible lenders might try to send you a refund check in some cases, but even then, imagine this: if they got it wrong the first time, how confident are you that every single fee was evaluated correctly? That's a question to ask yourself. Instead, why would you not want to be confident on day one before signing on the dotted line versus taking the chance that maybe you're working with a lender that's ethical, that might catch it someday after loan close and might come back and tell you, hey, Mike, here's your $100. That's a chance that you take on the morality of the lender that you're working with versus you can be confident upfront. Hold on, even before I sign, I know precisely what I'm paying for and the service that I'm going to get, and I'm confident that the service I'm going to get for the price that I'm paying is the right one.
Mhm. Really love this. Actually, if there's a way to look at bank fees in the future in general, because I remember I had a mortgage that got sold to Wells Fargo, and all of a sudden I get a thing in the mail about all these new fee schedules of anything that can happen. And I'm like, how is this even legal? I buy a mortgage with one company. A couple months later, I'm with a new company. And now I've got 18 kinds of fees that I didn't even talk about in the first place, know about in the first place, because it's a new company.
I'll tell you a little secret, Mike, what happens. So, with the regulation that whatever fees go on your loan estimate, depending on what section it is in, primarily for the section where they are held to tolerance, lenders would want to inflate it upfront and will tell you, hey, Mike, it's going to be $2,000. Why? Because they know if it goes above it, they might end up have to shelling the money for it. So they'll just pad it and say it's $2,000. But in the day and world where we can get to the precise mathematics and the loan economics, I just don't understand. And I think it is time that customers demand more. The days are gone where, hey, Mike, just believe me, just sign this and we'll fix it later. Those days are gone. I am looking for an era where institutions, financial institutions, would respect you for who you are and would pay you for using your data. So today, when you go pull your credit, you end up paying 20 bucks, 30 bucks,
Yeah.
whatever it is. But it's your data, Mike. I envision a day where a financial institution might come to you and say, Mike, may I please use your data, your first name, your SSN, your physical address? I want to run through my algorithm, my loan application to see if I can approve you. And by the way, here's 20 bucks for me using your data. And that's the day I envision. So, to that end, what we are doing is we are building the platform on blockchain where we'll
I
bring
like it.
borrowers and investors on the same platform. So today, keeping with mortgages as an example, what happens in mortgages today when the borrower goes for a loan to the bank? The bank will approve them, but any bank, no matter what bank it is, they don't have unlimited cash to finance all the houses that there are, right? So what they would do is they would do these loans, and once they have a sufficient number, they'll package it and they'll sell it forward. They'll sell it forward to other investors like Freddie Mac, Fannie Mae, and the likes. And they will insure this and chop it into smaller pieces and sell it forward as MBS, mortgage backed securities, commercial paper, and the likes. And that paper could very well be in your 401k or my 401k or in our stock portfolio as part of a REIT or some other instrument. But when you go take a look, I bet you're not getting 5% return on that investment. So, what really happened, if you look at it, it's your money that was used to pay this borrower. That borrower ends up paying 5+% in today's environment, but yet you're not getting anywhere close to that. And if we had a platform like the one that we are building, where these two people were matched on this platform, and in this current market rate environment, if they agreed on 3.5%, both the borrower and the investors are benefited. And in that particular era, when this is facilitated, that's when people who want to use borrowers' information that borrower rightfully should own, I envision them paying for that data to run through their application.
You know, it's interesting. I have a friend right now who's the CEO of a company, and what he's doing is he's collecting people's data, and he's saying the average person has $20,000 worth of data that's being sold by their search engine people, by their social media companies. He's saying, look, it's your data. If others are going to use it, they're going to pay you for it. And I truly, truly, truly love that mission. Blockchain seems like the natural evolution. Put it in a distributed blockchain. Everybody can see the hash. Everybody can see the transaction. We can provide non-repudiation because you've got that transaction. It's distributed blockchain, assuming it's distributed, and that way everybody around the world can see the transactions because the hash, they can't be manipulated. I love it, love it, love it. It's the exact opposite to me of Ripple, which is basically where the banks decided, hey, wait, we're losing the world's money supply to distributed blockchain, so we're going to start our own. Here, the four of us, a couple of big banks, now we started, and now we're going to control the world's money supply. This is the exact opposite, Yatin, and I love this.
Yes, it is about giving the power back into people's hands. It is about democratizing finance. We are on a mission with a vision to democratize finance, meaning we want to make borrowing affordable for everyone, regardless of borders, wherever they might be. Across the globe, we want to make borrowing affordable.
And I know right now you're US based, but I think what you're doing is so big. How about the future? Any other countries, for example?
Absolutely. We started in the US, Mike, because US is unique, where they have a securitization mechanism. Europe has some quasi securitization, but Asia has none. So we wanted to start in the US because that's complex, bigger market. And once we have solved for a complex and highly regulated financial instrument, the rest of them should be easy to fall, if you will. So we will get into secured lending, unsecured lending, and using blockchain because it has no border, it is borderless, it's open ledger, accessible to all, reversible by none. We expect this platform to be used globally to democratize finance.
And I like that. But also with blockchain, I see this. So the securitization of mortgages with mortgage-backed securities did not come without its problems. Basically, a bunch of bad mortgages were sold. A couple of banks created some derivatives, some financial instruments, and sold horrible debt as grade A debt. And there were countries in Europe that were basically bankrupted by buying this debt to improve their balance sheets. And then when the debt defaulted, I mean, we had the mortgage crisis, we had the housing crisis, we had the bank crisis, and then the government even forced banks to merge, like Wells Fargo, which was a stable bank. Here, you go mix with Mycobia. So, poof, now together, we'll give you money and we'll put you together. So, the mortgage-backed securities really scares me. Now, at least with blockchain, we'll be able to see what those securities are, right?
Absolutely. And so we are also looking to invest and research into digitizing all title records. So by digitizing title records, we think that we can get rid of what we commonly refer to as title insurance today. So, Mike, do we have time? May I explain a little more because I think this is
Yeah,
important
talk
for
about
our
title
audience.
insurance because most people don't realize they're buying insurance to protect against history. So please talk about this because I want our audience to know how to buy a home, how to get more out of life, and how to live in a manner that they get more with what they have. So please.
Very important. So, title insurance, by nature, by definition, insurance is something that protects you from a calamity or something that might happen in the future. And we end up taking title insurance today when we buy a home or even when we refinance a home, guys. And title companies would be quick enough to tell us, of course, our insurance is also protecting you from the future. But what they're protecting us is any errors and omissions that they found from the past, but they find in the future is what they're protecting us from.
Yeah.
So let me get this right. So, yesterday, Mike and I went for lunch, and I ended up paying for that on my card. So he gave me $11 in cash, a $10 bill and a $1 bill. That's how he paid me back. So today, when I was going for lunch, I tried to use the same $11. And the guy tells me, hold on a minute. How do I know that these two bills that Mike gave you yesterday are real? I want you to insure it. I want to be insured that this is real money. That's how backward this title insurance is. Now, flip that around. If the title records were digitized, they were on open ledger, everybody could see it. Once the transaction is reported and recorded, it's irreversible, right? And it is tied to that physical property. Why would we need title insurance in the future? I don't see the need for it. And title insurance, by the way, guys, is the biggest expense when it comes to your closing cost. No matter what state, no matter what property we're talking about, that is amongst the topmost costs that you will incur while getting a mortgage. And so, having said that, it is extremely important that we look into researching and advancing technologies in this space because we do see a day when title insurance will no longer be needed as we digitize all of these records on blockchain.
Yeah, and I want to make it clear for other people. I want to really summarize title insurance. What title insurance is this? You go to buy your house and you pay like $1,500 to say, so that 10 years from now, somebody can say, 300 years ago, my grandfather owned this plot of land and we lost it. Therefore, I own your house. That's what title insurance is. So we're ensuring that no one can say they didn't have it. But if it's on the blockchain, everybody in the entire world can see it. They know it's your title. There's no point for title insurance.
Exactly right.
So this is just disruptive, just like any other technology, which changes the way we live, work, and play, and makes certain things irrelevant. Power to the consumer, not so much the insurance company, so and the banking company. So I'm sure they'll be fighting it along the way. You're a problem because you're taking their money and giving it back to the people.
That is exactly right. So that's what we're doing currently. But also, we have a lot of exciting projects that our teams are working on, Mike. For example, a new project that we have been very excited about, if I may share about it a little bit here, right? So we are looking to create an experience in metaverse where the user, when they are browsing through the metaverse and they're scrolling, taking a stroll in the metaverse, and they come across, let's say, an NFT that they want to buy, or if they find a concert or a live event for which they want to buy the tickets for, and they might not have enough, whatever currency it is that they need to spend it in. What we are looking to do is we are going to use natural language processing, understand through natural conversation what their financial need is, what is the purpose of that money, and take that. Interestingly, we match it up to a loan application. We take it back into the real world. We find a lender that will meet that particular financial demand of the borrower, bring it back into the metaverse, convert it into the currency that they're looking at, and get them approved instantaneously so that they can go along with that concert or live event that they're looking to attend, or buy that NFT that they're looking to buy. So those are the type of things that we are currently looking into expanding further.
I love that. I know a bit about blockchain and a bit about cryptocurrency mining and a bit about banks. And I remember when the banks were all saying, your account's closed because you did some cryptocurrency mining. You had a cryptocurrency transaction, your bank account is closed. Now, after that, the banks invested in blockchain, and all of a sudden, now it's good. And all of a sudden, we can do this. I love that. I do. I really do in the future. Connecting the virtual worlds. Now, to me personally, I live in the physical world. I like to go outside. I like to practice yoga. I like to talk to humans. But I got to tell you, people are gravitating towards virtual worlds. When I worked at Cisco, everybody was playing with Second Life.
Mm-hmm.
I wasn't, because I was like, I got a real life here. I want to maximize it. I live once. I know how it ends. But, the world loves virtual worlds. The world loves virtual reality. And the trend is going there, and it's going to be there.
I think virtual, like you rightfully said, virtual reality world is here to stay, is what.
Yes.
And I think where most of the energy should be spent is on the intersection of virtual and reality.
Mm-hmm.
Right? Virtual and real world, the intersection of the two, where both can coexist and both can co-mingle. So in the previous example that I was talking about, Mike, it's important that we tie your identity to your digital twin in the metaverse. So yes, I understand the anonymity of blockchain and currency and all of that, but at the end of the day, the spender of that is Mike. And if Mike gets the loan in the real world in his name, there needs to be a connection to his wallet into the metaverse that Mike can spend. That's what we are looking to enable for Mike.
Yeah, I absolutely love that. It's that intersection point. That's what's so exciting about this, because there is the real world, there is the virtual world, and they're starting to commingle. And, it's how do you build the balance so you can still live in the real world without getting sucked into a virtual world like somebody is in a video game all day long. Because the reality is, it's great doing some of your day in the video game, but you got to come out and talk to humans the rest of the day, because your manager is going to be human. Your customers are going to be human. They're not going to be avatars. I mean, at least for my world, which is cloud architects that are going to design a $200 million solution, who's got to present something in front of the CEO. Being in that virtual world is not there. Yet at the same time, a few weeks ago for a major publication, I wrote an article on interviewing in the metaverse, because it's the mingling of the worlds. That's what I see, Yatin. I agree with you 100%. So let me ask you a final question. If somebody's buying a house in the US and they want to take the best care of their family, ensure their financial success, obviously they need Confer today, and I love that. Any other last guidance for our audience out there, or your audience that really wants to think about how to buy a house, how to maximize their financial opportunities, etc.?
Know before you owe. Informed choice. Equip yourself with information so that you have choices. Do not settle for a single offer that somebody says, oh, this is the best, trust us, believe us. Be confident and shop around. Look for as much knowledge and information that you can acquire as it relates to your particular transaction, so that it creates an optimal offer that's relevant to your financial situation. You're not just one of those 1,000 people. For the bank, you might be, but for you, this is your dream home. This is the difference of having the dream of home ownership versus renting. It's a key difference. So have a tool by your side that you can be confident that the financial instrument that you're getting into is the one that meets your financial need the best.
Absolutely love that. So be the CEO of your own family business. Do your due diligence, just like a business would. Look at the fees, compare your options. You can only have money to spend in one place, so it would be an opportunity cost, just like a business. Choose the one that's right for you, right for your family. Yatin, I love it. We basically say the same things in slightly different words, but yours, I love it. Especially, I know all about these fees and mortgages. I've helped a tremendous number of people buy their first home because I've got a lot of knowledge in the real estate world. Plus, I also translate a lot of English to Greek for lots of family and friends. So I'm really good with a lot of these paperwork. So I've done it. I've seen it. I think what you're doing for the world is fantastic. I'm excited for my audience to see it. So Confer today, how do they reach you if they want to download this?
So it's available on Google and Apple App Stores, is available to download for free. And it sounds like self-promotion, but guys, I have to say this. Because there is not a tool like this that exists, there is no such tool. So that's why it is critical that you download this app today and be confident that the mortgage that you're getting into is the best one for you before you sign on that dotted line.
I'm going to put it into the time value of money because I need an ROI model of everything, Yatin. Average home price right now is $400,000. What can this tool save the average person on a home?
I have seen examples where they have spent a lot more than this, but I'll go with our average. Comparing just two official loan estimates, they will save upwards of $1,500. And if they save if they compare five or more official loan estimates, they'll easily save upwards of $3,000 and more. And those were just averages.
Okay.
Oftentimes, I have seen people save a lot more than that.
Okay, so let's work with $3,000. I got to build an ROI model. How many hours does it take the average person using your app to compare 5 mortgages?
Well, I'll be honest with you. If you're talking about a first-time home borrower, it's almost like pulling teeth for them because they are also getting introduced to industry jargons. And I will guarantee you that it will not be apples to apple comparisons between these lenders. You'll see somebody call it a pink fee versus a blue fee versus a yellow fee. And understanding all of that is a cumbersome and takes hours. To a point, I have interviewed so many first-time home borrowers. It's almost pulling teeth and they give up at some point. But if you're talking about an experienced investor and they are onto their 10th property, they do it themselves with your HP calculator and Excel spreadsheet, plain and simple, and it takes them hours.
Yes.
Just this Friday, I was talking to an investor. Right as I'm talking to him, he pulled out his phone. He showed me the Excel spreadsheet that he elaborately created. And he shared with me that he spent over 20 hours coming up with that Excel spreadsheet. So that's a data point for you right there, Mike.
Right, but how many hours with your program to compare 5 loans?
Click of a button.
Okay, can it be done in 15 minutes?
As long as it takes for you to upload 5 official loan estimates and click a button.
Can we say 1 hour?
I would say if you have your 5 loan estimates, it's 5 minutes.
Okay, so I want to work it through. If it's an hour, it's $3,000 an hour to do that, which is a lot more than most people get paid. Even someone earning $200,000 a year is $100 an hour. It's still 30 hours of their time. And the average person doesn't earn $200,000 a year. So at $100,000 a year, it's 60 hours of the person's time you're saving at $50 an hour. That's huge.
Huge.
That's why I wanted to do the ROI model. I wanted to see, what is it really saving me? If it's saving an average person, a worker that earns $100,000 a year, which is not an average income, by the way, it's higher than average income. But even at that, at $50 an hour, it's saving them 60 hours.
Spoken truly like an investor, an experienced one, that is. So
60 hours of time, that's extraordinary. So save yourself 60 hours. Use this app. I would. And then my next home purchase, I'm used to my HP 10C and my Excel spreadsheet, but I'm going to use this app too because I'm excited about it. And I think it's great, Yatin.
And you guys have nothing to lose. It's free to use. So download it now and just be confident that the next mortgage that you're getting is the best one that you can have.
And I have a feeling this is going to be better than all my own calculations. If it is, it's what I'll use in the future exclusively. But I got to tell you, I love it, love it, love it. Yatin, thank you so much for coming on the show. Cloud-based way to improve your own personal finances, your home purchasing ability, and find a way to basically maybe pay your home off sooner by applying that extra savings to principal. Love it. Yatin, thank you so much for coming. Can't wait to download that app. I know I'm going to be playing with it, and it looks super exciting.
Thank you. Thanks for having me, Mike.
It was so nice having you join us for this video today. Let me tell you about some free services we do for the cloud community. We have a free How to Get Your First Cloud Architect Job webinar. where we tell you all the things you need to do and know to get your first cloud architect job. In addition to that, we actually have a free question and answer session live on YouTube, where you can come and ask us any questions you want about building your career related to cloud computing or networking, and we'll answer them in real time for you because we want to get you to your goals. Several more times per week, we have guests from industry experts that I've known for decades that are movers and shakers that have changed the world, that can give you information so you can build the best career. I invite them periodically. They are on my show. If there's a chance to do some free training on our channel, we'll do it live because we want you to all to have the best skills for the best career. So please subscribe and hit the bell. I look forward to seeing you, and I look forward to assisting you in your technology career. Thank you so much. This is Michael Gibbs from Go Cloud Architects.